Kenya, many small-scale farmers decry lack of sufficient financing and upscaling their production. Different public and private finance institutions have modeled various solutions offering grants and credit facilities to farmers and SMEs in the agriculture value chain. The sector is also facing unforeseen circumstances resulting from climate change, market forces, pests and diseases calling for agriculture insurance. The Standard Media Group, through FarmKenya, has organized a virtual edition of FarmKenya Connect live on KTN News and KTN Farmers TV, focusing on financing options available for farmers in Kenya, challenges in accessing credit facilities for farmers, insurance services available for farmers in Kenya, financing for the youth in agriculture, and green financing initiatives in Kenya.
Access to finance is critical for the growth of the agricultural sector. The shift from subsistence to commercial agricultural production requires funds. However, the risk factors inherent in the agriculture sector often inhibit financial institutions from lending. Consequently, although governments are now making an effort to attract investments for agriculture, the lack of understanding of the financial risk and opportunities in agriculture deprive the sector of the much needed funds to boost production, processing and marketing. The agricultural sector is also facing unforeseen circumstances resulting from climate change and global warming, market forces, pests and diseases, calling for the need of the agricultural insurance. These will form the key areas of discussions on tonight's forum. You can join the conversation through slido.com. Event code is FarmKenya, or through our social media platforms at FarmKenya, at KTN News KE, and FarmKenya 254. To help us understand the issues, we are privileged to have 4 panelists tonight. One of my panelists is Mary Njeri Thiongo. Mary Njeri Thiongo is the National Coordinator for Decent Rural Youth Development Empowerment Program at the Food and Agricultural Organization, FAO. Among the team that established the development of the Youth Enterprise Development Fund between the year 2009 and 2012, where she headed the Enterprise Development Unit. My second guest tonight will be George Kuria. Currently, George Kuria is the CEO at ECA Africa. George also holds an MBA from the Strathmore Business Schools, a Bachelor in Commerce Insurance from the University of Nairobi, and diploma from the UK Chartered Institute. As ECA Africa CEO, George provides strategic and managerial leadership to achieve revenue, profits, and business growth. My third guest will be Samuel Ogola. Samuel Ogola is the acting CEO at Warehouse Receipting System Council, and he holds an executive master's in business administration, leadership and business systems, development from Copenhagen Business Schools, master's in business administration from Inorero University, and international trade and business from the University of Nairobi. He also has over 30 years of experience working with government, private sector, and industry organization, both locally and internationally. Last but not least, we have Harry Kimtai. Harry Kimtai is the PS in the Department of Livestock at the Ministry of Agriculture. He is the Principal Secretary, State Department for Livestock, Fisheries, and Irrigation at the Ministry of Agriculture. He is also an economist specializing in regional planning and economic growth. He has served on the board of the Capital Markets Authority and has wide experience in planning and on administrative issues. Now we'll go straight to the gist of the conversation, and I will start the conversation with Mary Njeri Thiongo. And my question to you, Mary, will be, why has it taken us this long as a country to be able to finance our farmers and even the sector at large?
Thank you very much. First of all, I would say that it has taken long, yes, but we have made significant strides in terms of that element of financing farmers. However, I would like to look at financing of agriculture in the broad spectrum of the entire value chain, apart from just activities at the production node. There are many challenges that come with the farming sector or the agriculture sector that most financial institutions have been very, very afraid of going into that sector. First of all, the risks that are there are perceived to be quite many, and sometimes they feel it is felt like they cannot be mitigated. As we have progressed through this journey of financing agriculture, a lot has happened. We have had ways of identifying those risks, and also mitigation of those risks have been put in place. We now have insurance companies that are providing strategies to mitigate the risks. We have now crop insurance, we have livestock insurance, and that is encouraging more and more financial institutions to get into that sector. When you look at the kind of farming that you do, it is very subsistence. That is another challenge that has forced the financial institutions to find it as not a very attractive sector. When you look at the sectors where most of the money is going, it's going into real estate, into mining, into manufacturing, into wholesale and retail trade. When you look at those sectors, you will see they are huge sectors that move large volumes of money. So managing credit in those sectors is a bit more easy than when it comes to agri-sector. And that is why you'll find among the sectors that are being funded, even currently by the financial institutions, agriculture is the lowest. We are talking about 3.9% of all financing of financial institutions currently going to the agriculture sector, according to the recent economic survey report of 2019. When you look at other sectors, wholesale and trade, you'll find 22%, real estate, you'll find 17%. So most of the money is going where there is a huge return on investment, good cash flows, and easy to pay loan. When you come to agriculture, you find that subsistence farming, not very high return on investment, shaky markets, the sector is not well organized. And so all those challenges force the financials to look away from the agri-sector. But I could say that now there is more and more enlightenment. A lot of actors are coming in, a lot of players. The sector is getting organized by the day. And when you look at the prospects of this sector, according to the recent World Bank report, it's a sector that is going to be worth $1 trillion by 2030. So it's a huge sector. It has a lot of opportunities. There are a lot of good strategies that have been put in that sector. If you look at the blue economy, you'll see there's a lot going on, a lot of good plans that are in place. And so it is a sector that is supposed to rake in a lot of money. It's a sector that is projected to have very huge growth. And so the financial industry is also looking keenly to that. And if you look back now, you'll see a lot of interest in that sector and a lot of financing going to that sector, both from the financial, mainstream finance, other savings and credit cooperatives, microfinance. The government is also investing a lot in that sector. So I think we are getting somewhere, even though we have been quite having a lot of challenges before in that sector.
Okay. Well, indeed, we are really getting somewhere with agricultural financing. I'll also want to bring in Samuel Ogola. Samuel Ogola, I'll also ask you the same question. Why has it taken us this long to have agricultural financing and be able to advance credit to our farmers?
Well, I don't think it has taken us long. There have been several other interventions by government, and that's why the sector is, it's not optimally, but the agriculture sector is receiving up to 5%. But definitely, of course, the government has realized that it can do much better. That is why last year, the Parliament enacted the Warehouse Receipt System Act, and this year it was inaugurated by the Cabinet Secretary as a government initiative to enhance financing in the agriculture sector. So this is one among many interventions that the government has put in place. As you realize, agriculture contributes 26% of the GDP and employs over 40% of the national employment. So it's a critical sector, and especially when you look at the youth, it has the capacity to absorb many more youths through job creation. Thank you.
Okay, thank you very much, Samuel. Let me now bring in George Kuria. George, I understand at ECA Africa you're doing a lot of agri-insurance. Tell us a little bit about what it takes for a farmer to be insured, or a crop that a farmer has planted to be insured.
Yeah, thanks. There are several ways that is able to access insurance, and we must start from the beginning. The product needs to be developed, and just like agri-finance has taken time, agri-insurance also has taken time, because you need to go through various iterations before you find the right products that are responsive to the needs of the farmer, and ECA has been at that for about 11 years, and now we are starting to see that really taking off. Farmers access insurance in various ways. One could be bundling. For example, if they're taking loans, and we are seeing financials who are using insurance to de-risk the credit that they give out, the farmer is able to access insurance in that way. You could also bundle it with agriculture products such as seeds, fertilizer. At ECA, we also have our own field agents. We call them village champions, who again are able to reach the farmers, teach them about insurance, train them about it, and then enable them to get access to the insurance.
Thank you very much, George. Harry, you represent the government in this forum, in this conversation today. Maybe tell us a little bit about when it comes to financing and insurance, especially for the livestock sector.
Thank you. Let me start by saying that, as mentioned by my colleague Ogola, in terms of the role of agriculture, specifically to our economy, in terms of contribution to the GDP, I think it is one of our backbone. And the government has noticed that, and what it did is basically to support the sector. And as you mentioned earlier, that maybe it has taken us too long. I don't think it has taken us too long to start support to the agriculture sector in terms of credit. The government realized the importance of the agriculture sector in the economy, and therefore it started very early supporting the farmers through the Agricultural Finance Corporation. That was specifically established to support farmers in acquisition of land, acquisition of other implements that supports agriculture. And this has gone on, and therefore we now even have other additional support mechanisms that the government has put in place. The most recent one, as mentioned by my colleague, Mr. Ogola, is the housing receipt system that has come on board to support the farmers. This is, among other support, we have for example, I'll just talk in terms of the agriculture sector before I go into the livestock subsector. We have the Cherry Fund, for example, which is a revolving fund that is going to support a specific subsector, which is coffee. Then we have the Commodity Fund that is going to support other products, other lines of production in the sector. And then AFC, Agricultural Finance Corporation, supported the farmers in livestock area, purchasing the new breeds and other implements that will support livestock subsector. But I think it is one area that it took so long for the government to come up with other policies to support it. And more specifically, because if you look at our economy in terms of the livestock, most of the livestock is found in arid and semi-arid areas of our country. And therefore, this has been a challenge in terms of lack of collateral security, that's in terms of title or land, because the pastoralists are in areas where the land has not been adjudicated, they are not title, and therefore they operate in what is called the nomadic system. Now, we've understood that, and therefore, as a government, we've established, we are coming up with a new policy now that is going to support the livestock subsector. And specifically, we have now what's called the Livestock Identification and Traceability System. This system is operated as follows. One, it's going to keep all the data of the livestock farmers and the livestock that they have in a central data that is foolproof, that's being operated by the Directorate of Veterinary Services. that who will be able now to share with the financial institutions so that they are able to access credit using their livestock. Now, this is a new innovative approach that we want to support the livestock sector so that we are able to support that sector to grow. Now, as you mentioned earlier, because of the challenges of diseases, challenges of change of weather, there is that risk. And therefore, we've realized the importance of insurance to come into that space. Now, we have started, we've developed the insurance policy, which is both in crops and in livestock. And the one for livestock operates in this model. One, it uses a satellite to monitor what is called the normalized difference vegetative index cover, which keeps on looking at, using the satellites, keeps on monitoring the forage cover of the land. And if it continues getting depleted because of climate change, because of drought, it triggers what is called a payout. And this payout doesn't mean that you wait until the farmer has lost the animals. It is triggered at a certain point where it requires intervention. And the insurance company will pay the farmer so that the farmer can now continue buying mineral supplements for the animals, fodder for the animals, veterinary drugs for the animals, and therefore to be able to sustain itself to the next cycle. So that's why we looked at it and say, with the support, with the credit finance from the financial institutions, our agricultural finance institutions, there is also need now for a specific insurance policy that is going to help in reducing the risk.
Okay.
Yes.
George, let me come back to George. George, I understand you also work with insurance companies when it comes to providing cover for farmers that you work with. How easy or how difficult is it has it been for you when you approach insurance companies to provide cover for farmers?
Yeah, different insurance companies have different appetites for this type of risk, and especially at the early stage of product development, you know, we don't have large numbers insured, and yet the risk remains the same, and therefore there's a level of shyness towards it. But we have insurers who have taken, you know, the leap of faith and have been involved in this. As the PS has pointed out, government has supported heavily by subsidizing insurance to enable farmers afford it, because again at the initial stages the products are expensive because you don't have the numbers, and government involvement has become critical in the subsidies and also in enabling the network to be able to reach the farmers. But as the product then matures, you will tend to see more and more insurers getting involved. We're also lucky to get a lot of support from development agencies who also realize, you know, the challenge that comes in developing these products. So organizations like AGRA support us to build the distribution network. Other organizations help us in the research and development of the products, which takes a long time to collect the data and put it together into what the PS refers as indices, which then become utilizable by the insurers in the products and also in the settlement of claims.
Okay. Let me now go to Njeri. Njeri, I understand you work a lot with the youth. And as we understand, almost 80% of our farming folks are over 50 years old. So most of them are on their retiring age. My question would be, as you work with the youth, what is their understanding about agricultural financing and taking insurance for whatever they do, even if they are not doing farming at the moment?
Okay. When it comes to the youth, you find that youth have a lot of issues when it comes to going into agriculture. First of all, you look at the issues to do with how they perceive the sector. Most of them, of course, because of orientation and their upbringing and everything, agriculture is not usually their first choice of a career. So most of them will be looking out to go to white-collar jobs. They are looking out to be doctors, engineers, lawyers, teachers, until they realize that probably that is a dream that they're not able to get into. And so the fallback is farming. And they take to that because they have nothing else to do. not because they choose to be there. So when they get into the sector, it is very challenging for them, because when they look at the role models they have, the ones you're calling the old people, there are very few that they admire and say, I want to be like this farmer. So because of the subsistent nature of our farming and a lot of challenges that the farming community go through, the sector is not very attractive to young people. However, with time, we are trying to demystify what agribusiness is all about. So we are not talking about farming only. We are letting them know the many opportunities that exist along the value chain and making them understand you do not have to go into production activities. You can do any other activity along the value chain. You can go into processing. You can go into aggregation. You can go into value addition. You can be a distributor, you can manage the supply chain. So trying to demystify agribusiness for them to start spotting opportunities of where they can fit in, especially given the special considerations that young people do not even own land. They don't have access to land for farming, most of them. And those who do, probably it is their parents' lands. And when you talk to many of them, the parents allow them to use the lands when it is, for them, it's off-season. They've grown the main crop, for example, it was maize. They've harvested the maize. There's a few months in between for the land to lie fallow before they can plant the next crop of maize. So the young person is allowed to use land for those 2-3 months. And then when you look at that, you ask yourself, what can they produce in 3 months? So they'll have to go for short-term crops and produce. And then that also affects a lot of things in terms of, for example, if they access a market, the consistency of their supply is also at risk because they do not have a long-term use of that for that land. So we try to show them that, yeah, they can go to production if they have access to land, but also there are so many other things they can do along that value chain. Another challenge they have is also how to access especially finance. You realize that most of these young people maybe are just out of school. They do not have any credit history. They do not have significant collateral that they can use, or they don't have any collateral at all. And if they go for the main conventional financing opportunities, they'll be assessed using those parameters. And those parameters, you'll find they will not tick most of the boxes, and therefore they will not qualify. So what we try to sensitize them also is alternative ways of raising capital, especially when they are going into startup businesses. And we try to show them you can fundraise from family, from friends. You can also convince people who have money to be your angel investor so that they can get the seed capital to go into business. The good thing is that we also have a number of development organizations currently that are dealing with youth at the startup stage. They give them grants, and then they can be able to venture into those activities. If it is higher level activities like agro-processing, we also have institutions that are focusing on supporting them to do product development, that they can give them some seed funding, which is a grant, and then they can start the business. Then from there, they can be given training on financial literacy, and they can start building their financial statements. They can have some history with the bank that they've been banking there. They have active bank accounts, and the next time they're being appraised for a financial product or a loan or credit, then they qualify because then they have already established a relationship with the financing institution. And then you also find that when young people approach financing organizations, what the feedback they give us is that there is a lot of doubt that they have what it takes to get money, do business, and repay their debt. So we're also looking for, we're working with youth who have done that in the past, who are successful, and using them as role models and peer mentors, peer educators to show them how it's done, and also to try and create confidence within the youth, and also talking to the financial institutions to also try to come up with models that they can use to target this group specifically without using the conventional method of appraising them in terms of looking at how capable they are to manage debt. So those are some of the challenges that we go through. And then another thing is skills. You find that young people would like to go.
Just a little bit. We want to take a short commercial break first, and then we'll come back and continue with this conversation.
Conversation online using the hashtag FarmKenya and participate on slido.com. Event code is FarmKenya. FarmKenya, working to secure your growth.